Hi guys, welcome back to my channel, The Wealthy Mindset. It's yours truly, Money Making Mitch. And as usual, guys, this is not financial advice. Please do your own due diligence and research. The title of my video today is The Ultimate EV Stock to Buy with $500 right now. If you had $500, what would I recommend that you buy, in my opinion? Well, let's start with this. As Nio added another 2 battery swap stations yesterday, with CATL confirming that this is the right way forward, we added 2 more battery swap stations yesterday on Christmas Day, bringing our total to 2,870 battery swap stations in China. And we also added another 4 charging stations, bringing our total to 2,536 charging stations, the most of any EV company in China, which will start bringing us dedicated revenue in the future. Nio still looks dirt cheap, the company I'm talking about, Nio. Chinese premium luxury EV company in China. The leader in the premium EV luxury company in China. Nio still looks dirt cheap to its long-term growth potential. And yes, it is. It is buying opportunities for those who want to become millionaires. Many electric vehicle stocks hit their all-time highs during the apex of the meme stock rally in 2021. As we've seen with Tesla now, it has turned into a meme stock. At the time, low interest rates, stimulus checks, social media buzz, and a contagious fear of missing out, FOMO, drove many investors to scoop up the market hottest EV stocks while glossing over their staggering losses and soaring valuations. One of those stocks was the Chinese EV maker Nio. Yes, people were buying in the $60 price range, which saw its stock soar tenfold from its IPO price of $6.26 in 2018. On the day this company came into the stock market, I was able to get it at $14, to a record high of $62.84 at one point on February 9, 2021. But today's Nio stock trades for less than $5. So is that a buying opportunity when you were buying at 62.84, 60, 50, 40, 30? Is it a buying opportunity now at $5? Should you be averaging down or opening new positions? It ran out of juice as the growth slowed down. It racked up more losses, and rising interest rates popped its bubbly valuations, just like with many others. But with an enterprise value of $9.3 billion today, Nio stocks look dirt cheap at less than 1 time this year's sales because of the shorting. It's still a highly speculative stock, says the writer, but it also has the potential to turn a small $500 investment, excuse me guys, into thousands of dollars. Let's review the 4 reasons the market could revalue Nio as a high growth stock again. Number one on the list is why I keep emphasizing, because I keep doing short videos on this, on the battery swapping advantage. What differentiates us from everyone else, which is what now Cattle is trying to get into and is going to get into because they saw it's the winning business model finally. Nio sells a wide range of electric sedans and SUVs. That market is a crowded one, but it sees itself apart from its competitors by using swappable batteries in its vehicles. Its batteries can be quickly swapped out, and its own battery swapping stations for either a single use or subscription fee as a faster alternative to traditional chargers. Nio sells most of its vehicles in China, but it's taking small steps into Europe. And mind you, we can swap a battery in less than 3 minutes, while the competition has to wait over 30 minutes to charge their car. And the competition has to hope other cars don't come to charge at the same time, because then your charging time increases. It expanded its battery swapping network from just 36 stations at the end of 2019 to 2,737. Well, actually, it's 2,870 at the time of this recording. At the end of the third quarter of 2024. It's still operating those stations at a loss, but economies of scale could eventually kick in. Oh, and it will, with Envo flooding the streets now. It's currently performing an average of 30 to 40 battery swaps per station per day. It's actually about 45. And to break even, they can perform 60 to 70 swaps per day to break even. And some of our stations are already doing that in Shanghai. If it reaches that milestone, it could gain a major advantage against its charger-based competitors. Now remember, we have more charging stations than any other EV company as well in China. That's why Xiaomi and all of them are joining our charging network. But also, it says if it reaches that milestone of 60 to 70, it could gain a major advantage. Now it begs the question, do you guys think that we will reach that 60 to 70 in 2025? Yes, indeed. Yes, indeed. Number 2, Nio is accelerating vehicle deliveries. Nio's deliveries more than doubled in 2020 and 2021, more than doubled. But they slowed down in 2022 and 2023, and it faced macro headwinds. Together, competition, weather-related disruptions, and supply chain challenges. Excuse me, guys, but in 2024, its deliveries accelerated again as it sold more high-end ET series sedans and Envo, the smart vehicle in China, which is our first sub-brand to bring us to our Model 3 moment. It also continued to sell more vehicles in Europe. Nio expects its deliveries to grow 51 to 53% for the full year. That acceleration counters the bearish notion that it will be driven out of the market by its domestic and overseas competitors. For 2025, for next year, which is right here, Nio expects to ramp up its deliveries of its cheaper Firefly in Europe. That's new model margins could be squeezed by the higher tariffs on Chinese EVs, which went into effect this October. But it's still competitively priced against smaller vehicles. It also plans to roll out its first plug-in hybrid vehicles in 2026. Now, also remember, we plan to double sales in 2025. Nio plans to double its sales from 2024 in 2025. We're going to double what we sold in 2024. Number 3, Nio is stabilizing vehicle margins. Very important, and we became cash flow positive for the first time in 2024. Nio's vehicle margin dropped from a record high of 20.2% in 2021 to 9.5% in 2023. That steep drop was caused by the grueling price war in China's crowded EV market. Tesla's steep price cuts exacerbated that pressure. Because of Tesla's desperation, they are going to have even worse margins in their next quarterly earnings. This is why Cathie Wood is selling off massive amounts every time it makes a big spike. That figure slid to 9.2% in the first quarter of 2024, but rose to 12.2% in the second quarter and 13.1% in the third quarter. That expansion was driven by its market share gains. Market share gains. And guys, with On1 Firefly, our market share gains is going to accelerate even more. It says, and higher shipments of premium ET series sedans, all of our ET series, like the ET5, the ET5 Touring. We have an ET6 coming out next year with other brands, with other sub-brands like the 7-seater. That expansion challenges the bearish argument that Nio's business will crumble under the soaring cost of manufacturing more vehicles and building more swapping stations. Moreover, Nio is still firmly backed by subsidies from the Chinese government, as Tesla was backed by the US subsidies in their early days, so it can afford to rack up losses for the foreseeable future. Yes, Tesla also had that advantage in their early stages, so the Chinese government is doing the same thing for us. Nio has plenty of room to grow, the analyst said. Analysts expect Nio's revenue to grow at a compound annual rate, CAGR of 29% from 2023 to 2026. They also expect it to roughly have its annual net losses by the final year. We should take those estimates with a grain of salt, but they are impressive for a stock that trades at less than 1 time this year's sales. Tesla, which turned profitable in 2020, trades at 13 times this year's sales. Therefore, Nio could easily generate multi-bagger gains in the market values. Stock could remain volatile for the foreseeable future as investors focus on its near-term headwinds, but it could lead at a lot higher once it overcomes those challenges. So this makes me very bullish and continue to be very bullish on this company, understanding that it's going to create millionaires as it grows into a $1 trillion corporation based on making our own chips, our own SkyO system that replaces Linux. And now the Chinese government is also asking Chinese manufacturers to get away from using American-made chips, Western-made chips, and also they're going to have to get away from Linux. So who do you think they're going to come to buy the SkyOS? Us, which is designed for the EVs, not for laptops. So I hope you guys found this video to be informational, inspirational, and motivational. If so, guys, do not forget to hit that thumbs up because it takes a lot of time to do these videos and the editing. And if you haven't yet subscribed, you might want to think about doing so, because in this channel, we are waking up the middle class for the first time to get a major piece of the pie as to how the game is played on Wall Street. And like 50 said, we get rich or we die trying, guys.